black swan.
Hello traders, EskiFX here. Today I'm going to do a trade recap for you all. So this week I caught a intraday sell of 49R. So if you follow my Instagram, you would have seen I posted this, or if you're in the Black Swan Telegram, you would have seen I sent out the point of interest and my view for sales for the session ahead. I caught this in the New York session. So what I'm going to do, I'm going to run you through my thought process, start to finish with a top-down approach, and hopefully you can get some value from this video. So we start live from the 4H, and when I looked at this, I asked myself, so what's happened in this market, right? What's going on? And how can I look to get involved? So as you can see, we're bearish because we are breaking structure to the downside. So it's quite clear that we need to be looking for sales. So I was looking at this high. What did it do? Well, first it's our lower high on the 4H, but it also mitigated this supply range here, which for me is a really big confidence. If we're going to mitigate a range like this and then continue to break structure, for me it's all about sales, right? Got to break a structure. Cool. So what am I anticipating for the session ahead when I see this? So I know we've got a strong high. What I'm anticipating to be respected to continue the structural breaks to the downside. We're currently interacting with a inside bar on the 4H right here. Yeah, and this interaction is really, really important to me because this inside bar mitigated, or was part of the mitigation of this internal range right here. So what I had to ask myself, so I had to build a story here, right? So I saw two things, and the first thing I saw was this mitigation of this range meant nothing, and we were going to see a counter trend move where we see a shift on the 15M, and we buy up to this point here. So I like this supply zone here purely because we take candlestick liquidity. And yeah, it causes our break of structure, right? But at the back of my mind, I was also aware that we mitigated this range. So if price is moving into an expansion phase, it may not need to come up by 100 pips to come mitigate supply zone. We've already had the mitigation, so the interaction with this current inside bar could be enough. Yeah, so my narrative is coming to play here. So for me, it's either we sell off here, or we get a counter trend buy, and maybe there's sales in this supply within the session or in the next day, which is great. So this is where I'm jumping down to the 15M because everything I need to see on the 4H has been presented to me. There's no more information I feel I need. So on the 15M, this is about refinement. So what do I see? Well, we're getting continuing breaks of structure. So obviously we break this structure point here on the 15M. So where's our swing structure on the 15M? So we've got a low here, right? We've got our high resting here. And then we got our subsequent low here. So in terms of 15M structural order flow, it is perfectly logical to trade into here and continue on our way. So this is where you also need to be careful when it comes to flips, because a lot of people will be looking at this low being broke, anticipating a counter trend play, and looking at this flip here. And yeah, it's a valid flip, of course, but you need to ask yourself if demand's really going to step into this market and we're going to see a shift from sellers to buyers. Really, you want to wait, and you want to see if we flip this supply range here. Because if we flip this supply range, that's serious commitment, because it gives us two things, right? It gives us a flip of the more significant point in structure, and it also will shift our 15M swing structure. So if we shift our 15M swing structure, okay, that's a bigger confirmation that we're going to have a counter trend bullish cycle into this more premium supply level that we could anticipate further sales from. So now we've got a general idea. So because right now we don't know what price it's going to do. Yeah, we can have we have anticipations, but until it delivers, we never really know, right? So for me, it was either we sell from here, or we flip here, buy, then sell. So I had a plan in place. So now it's time for me to refine where I'm going to anticipate the first sell from, because remember, we've mitigated this internal range of this bigger range, what was part of a mitigation of our higher time frame range. So the price delivery is extremely bearish, and all we need to do is follow it, right? So I was looking at this point of interest, the supply zone right here, and I sent this out into the Telegram. So if you're not in the Black Swan Telegram, please join. We do a lot of pre-session analysis, we do trade recaps, and we interact with our community. So if there's anything you're struggling with, whether it's structure, supply and demand, psychology, risk management, confirmation techniques, hop in the Telegram and we'll be happy to help. So we need to ask ourselves, what's so good about this point of interest I've selected here? Well, firstly, it's unmitigated, which is what we need to see. And it's also part of a flip, right? That breaks our 15M structure. Our structural point here is the last unmitigated flip, right? Because we have maybe go on the 3M, 4M. Yeah, cool. So we have our flip here. See price trades in. Then we get our third reaction off the back of this, giving us a point of interest that takes liquidity, because it's really important that our points of interest take liquidity, have interaction and break something. So we're taking liquidity here, we've flipped demand here, okay, signifying this is a major point sellers to control the market and sold it back down, and we've induced our point of interest. So what's inducement? It is simply resting liquidity above or below a point of interest, supply or demand zone. And inducement is used to lure early buyers or sellers into the market to then wipe their stop loss, sweep their stop losses, take their stop orders, and then mitigate from the real point of interest just to run price to where it needs to go. So we've got our flip zone, which is really nice point of interest. So really my job now is to wait for price to trade into it and to understand what the delivery is looking like afterwards. Yeah. So some key things here. Yes, we have a flip zone. Yes, we're following structure. Yes, this makes complete sense. But we have a V-shaped recovery right here, and we have impulsive price action. So we don't want to just sell into impulsive price action, because you're going to take unnecessary losses, right? So in this situation, it's not about just letting price trade into here, taking the first 1M chock you see, or the first 5S chock you see, and trying to ride it to hell, because the 1M chock could be the structural liquidity put into this point of interest, that the 15M chock then takes that liquidity to give us the real shift in order flow, where the real move starts to happen, right? So at this point, I'm just waiting for price to show me its hand, because I'm not committed to selling here until I see the right play in price, yeah, the right delivery. So as we can see, we trade into our point of interest, and we have the first signs of a 15M change of character. Because the 15M change of character here is key, because look at this impulse, correction, impulse, yeah? It could easily just do this, flip this, big buys off this, and then you're wondering why you try to sell a bullish 15M market, right? So that's cool. We see what happens afterwards. We get a V-shaped recovery because price comes in, mitigates, instantly trades out, and we know the composite operator is the only entity in any market who has the capability to do this. So we know there's a vested interest in protecting this point in price, and all our other confluences are coming into play now because we built our narrative from the top down. Okay, we really understand where this market wants to go. We just have to let order flow show us when to get in. So we got our change of character, which is confirmed right here. So now at this stage, it is about where do we get in? What is the logical point of entry? So this is where now we drop down to the 1M, okay? And it's really, really important when you're looking for trades and you understand what kind of trade you want to take and the purpose behind it, that you don't just sit on the 1M for 4 hours. Because if you sit on the 1M, you're going to see setups what are not real. They might look real in the moment, but you're just becoming a liquidity provider, yeah? So now I'm happy to jump down to the 1M. And now I need to figure out, what is the most logical point to take a sell from? Well, we've just broke a range, yeah, the 1M range here. 1M structure's been broken here. So when we do these continuation here is now going to get flipped to liquidity. So anything here really is no good, because this is now going to become the structural liquidity for the real move down. We could trade from the extreme, totally valid, but the theory behind a V-shaped recovery, if it's a true V-shaped recovery, that move was only put into the market to mitigate a piece of price, yeah? There's no reason for price to trade back to that level. Yeah, its job is done. Its function is to get in and get out. There's no reason for price to return. So we need to look for a flip. We need to look for the last point where supply really took over and injected heavy sell orders in the market to trade it down, and we get our flip right here. So this range here is flipped by here, this supply, and you're thinking, well, where's the supply? Where I don't see a flip. If you go down to the 30S, and this is where refinement's really important, and this comes with experience on the charts and like building this edge and like learning how learning the right points in price to target, yeah? Because if you see what happens here, right? Price trades into this demand range. You see this impulsive move out. So this is where buyers are trying to regain control of this market, and they're unable to. And we get this supply line here. Hold. So cool. And we've got resting liquidity below it. We've got order structural liquidity. We're coming off a 15-minute change of character from our structural point of interest. So all we're doing is following structure. This is simply the point where order flow has shown us it's ready to trade down. Again, I'm not going to say that you can't trade from these levels, because yeah, this could be totally valid. And I'm sure there are instances where price will just go, like, ignore the flip and settle from here. I'm not saying you can't do that. That is completely plausible, right? But for me, I wanted to sell from here. So I'm not just going to put my stop loss of 1 pip here, covering the highs, and praying that price trades in, respects it, and taps me in, yeah? No, I like to market execute after confirming my levels within confirming my levels with a fractal confirmation. So again, all I need to do is wait for price to trade back up. And then price comes back to our point of interest. I'll just rewind this. And at this stage, this is when I'm going down to the 5S. When price is approaching my refined point of interest, okay? This is when it's acceptable to go down to the seconds, because this is when you want to see your trigger. And for me, the 5S is my trigger line up so you can take the shot, right? So what am I looking for? As we come into here, well, I'm just looking for price to confirm that supply controls this market and demand is unable to hold this impulsive move up. So we let price come in, and what do we get? We immediately get a change of character on the 5S, followed by a V-shaped recovery. So you see how we come in, we mitigate, we instantly trade out. Yeah, it's only the composite operator what has the capability to move price like that so aggressively, right? So that's fine. We get our change of character, which is right here. So I want to see a failure of demand. I'm not just going to hit it because I've seen a change of character, because it's for seconds. It's extremely volatile and price moves erratically. So for me, the best confirmation technique when trading seconds is to see a complete failure of demand and then look for the most probabilistic place to take my trade from after that failure, right? So we get that, and what do we have here? So this demand zone is unable to hold price and we trade out impulsively. So I'm looking at this supply range right here. I'm looking at this supply range and I want to sell if price comes back into it, and if I can keep my stop loss above the high, as soon as price comes in, I'm going to take the sell. Yeah, so price comes in, taps me in. It's fantastic. So now it's all about how do I manage this trade, right? What's my risk management? How am I going to protect my capital, that I'm taking money off the table at reasonable points in price, and you know, where am I going to target, right? So for me, we're following structure. We've just had a break of 15M structure. We trade back into premium pricing. We respect the high. We get a 15M order flow shift, confirming that the market is going to stay bearish. So the most logical thing is we're going to take the low again, right? So my overall target is going to be the low. It doesn't mean I'm holding full volume for the 49R, yeah? That is, you can do it, but I mean, more often than not, you're going to leave money on the table because this could easily take you out, and then, you know, you've lost, if you let it run 30R and you get taken out, you're going to feel bad, right? So for me, I know from my testing and my live trading data that I can generally catch about 20 pips before I'm either taken out or if price does run, right? And if we look here, so about 20 pips, so about 20R, I will take 80% off. And I'll try and make sure that the 20 pip is realistic with what is being delivered by structure and supply and demand. Because if it's not realistic and it is more like 18 pips, it's more realistic, I'll take 80% off at 18R. But generally, I'm looking between 18 to 22 RR for my first partial, okay? So yeah, you know, in this situation, 20R makes sense because you could argue that there's a demand chain here coming off the flip. There's demand chain, and we've got this unmitigated refined demand zone what respected the flip, and we've induced it here, so the move could be that we take out the inducement and respect the refined, and then we go to the moon, right? So completely plausible. So, you know, to me, I'm quite comfortable with, you know, waiting for 20 hours to take my partial and then holding the rest for the low. And then, yeah, let price run, do its thing. I've got my partials set automatically. So there's nothing else I really need to do except from just watch this play out. And if you see what I mean, holding like these long RR trades, it can be psychologically difficult because, I mean, look at this movement, right? You could be thinking, oh, it's respecting this demand here, and I'm going to get taken out. And then you know, you might start getting frantic, you know, closing early, or, you know, over partialing, and that's not how you want to conduct yourself when, you know, going for the big R, right? You want to have appropriate risk management put into place. You need to understand where you're going to take your partials, how are you going to get out of the trade, how are you going to manage that trade, and deliver those same principles for every single trade you take. And this is how you deliver a profitable system. And yeah, so price eventually taps me out, runs my take profit, and I close the session off. And what happens afterwards is quite interesting. So price actually goes and runs the highs in the end, and then we sell off. But, you know, overall, I've delivered a great trade, taken 49R before partials, before you account for partials, and all is well. Yeah, so I hope you enjoyed that trade recap. Please leave your comments if you've got any feedback. And yeah, if you want to see more of this, please join the Black Swan Telegram, because we like I said earlier, we put out daily pre-session analysis, we share trade recaps, and, you know, the team are there to support you in your trading journey. And we're a community of about 237 traders now. So and yeah, it's completely free. So, you know, you've got nothing to lose. Thanks for watching. Peace.